Good day, ladies and gentlemen. Welcome to my channel. Gold and silver continued a somewhat contained decline over the passing week. Today is March 6, 2021, and I'm going to cover gold, US long-term interest rates, and gold miners, GDX. Before I continue, I would like to make a quick announcement. I recently started posting tweets several times a day on my Twitter account. So if you are interested to get more up-to-date information about the markets I cover, please follow me on Twitter. I will leave my account details in the description below. Let's start with gold. On a weekly basis, gold lost almost 2%, closing at $1,699. In a big picture, gold continues to consolidate within a giant flag-shaped formation. Gold continued to decline over the passing several weeks, putting more and more pressure. Last week, I suggested that the ultimate support for gold comes at $1,670, $1,705 level. Of course, no one can pick up the exact bottom, but let's try to project the most critical support levels for gold. Firstly, gold is approaching its 2.5-year support trend line, which it hasn't tested yet. Secondly, gold is expecting to find a massive support at the lower band of the flag-shaped formation. Lastly, 2020 lows serve as a solid support level for gold. Interestingly, all these support lines converge in one point around $1,670. I am not suggesting that gold should decline until $1,670 level, but it seems logical if gold tests three trend lines that converge in one point. Most importantly, the converging points target next week, timing-wise, meaning over the next few days we should see gold bottoming out. There are several other points that suggest a soon reversal in gold. Let's zoom in. As you remember, in a shorter time frame, gold was consolidating in a falling wedge pattern, holding on a lower boundary of the formation. However, gold broke down the support on February 26 and remained below ever since. Let's further zoom in to see what is happening in a 2-hour chart. Gold is gyrating within steeply falling wedge formation, which I believe gold should be breaking upside pretty soon, since apex of the formation targets as well the next week. Also, I would like to briefly cover gold chart versus gold miner GDX. From the February 26 up to March 5, gold lost 2%. But note that GDX added almost 3% during the same time frame. Divergence between gold miners and gold suggests that reversal in gold might be very close. Finally, I would like to briefly discuss US long-term interest rates. The reason for gold's decline since August 2020 up to date is explained by the rising long-term US interest rates, which is true. As you can see, US 30-year Treasury yields doubled, reaching almost 2.3% from March 2020 lows, whilst gold lost around 18% during the same period. Now let's focus on US interest rates chart only. Yields are starting to face resistance already, since previously broken support is now acting as a resistance. Furthermore, RSI is strongly in the overbought territory, where it was only twice over the last 3 decades, back in 1994 and 2006. Lastly, interest rates are approaching a multi-decade resistance. Therefore, I assume that yields are about to peak and back off very soon. With so much debt accumulated globally, I personally don't see a serious spike in the interest rates. This is it for today. Please note that this video is not an investment advice and prepared solely for educational purposes. Wishing you a nice weekend.